It's officially earnings season. I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's on the top of your mind?
Biogen. Look, if they have something for Alzheimer's, and the stock's a $55 billion stock, it's easy to see, given the fact that Bristol Myers bought Celgene. Bristol Myers, I told you to stay with that. Bristol Myers keeps going up. And you look what AbbVie paid for Allergan, it's natural to think that Pfizer should just go buy Biogen. I think it's not up enough. Judging from what we can tell, it's very unusual for the FDA to say, look, we really want this. So that's the story of the day. And even though it's up 79, 80 points, I hate to say it, but maybe you buy some now, and if it comes in, buy more. It's too big a drug.
There's another story of the day, which is one that's taking place in private markets, which is Softbank is now officially, according to reports from the Wall Street Journal, is now officially going to take charge of WeWork, and Adam Newman's out.
There's some mistakes in these stories. It says that the company's being valued at 8. You got to look at the debt, and so it really has negative worth. And I think that's really important because, remember, it was going to come public. And this is part of the perils of the junk that I have said. One of my themes, Catherine, is that as the year progresses, you're in a biotech window, and eventually, you're in an IPO window, and eventually you've got too many biotechs, you have too many cloud stocks, you've got too many cybersecurity stocks, and now we have too many WeWorks, too many. A company, by the way, let's just understand each other. Having leased, it was a great idea, but it was a leasing company, and I'm not going to diminish the fact that it was at one point this fabulous story because it was growth, but it also was debt. And this guy, Adam, made out a little too well. I think he had absolutely played it the way that a vast majority of people would have played it, this wouldn't have played out like this. He made it really hard for big institutions to want to be involved.
Did WeWork poison the pool for the rest of the unicorns?
I'm sorry, but
did WeWork poison the pool for the rest of the unicorns?
Yes, absolutely. Well, Disney Work, but also Peloton was such a bad deal. Smile Direct was a bad deal. We're now seeing, I have a piece on Real Money where I equate, I actually say, listen, if you look at Beyond Meat, you may have a GoPro situation. Now, that's Beyond Meat was a short squeeze. And when you offer stock, it's the end of a short squeeze. And when you offer as much stock as Beyond Meat will be offering, not that far from now, at the end of the month, then you'll see what happens. So be careful and read my Real Money piece so you know what's about to occur. I think no one else has done this analysis, so it's really important that you read it.
I wanted to get to your Real Money column after we talked about McDonald's, but you just made a really good point when you compared GoPro to Beyond Meat as you did in your column. And one thing that came to mind for me was, is there a difference for Beyond Meat and GoPro because of Beyond Meat's partnerships with Real Money Stock of the Day, McDonald's, and other companies?
See, I think that the problem with Beyond Meat is you got Nestle, you've got Impossible Burger, you've got Tyson, and you have Hormel. And so there is no doubt in my mind that Beyond Meat is fantastic. I like it. Ethan Brown's done a great job. So it's definitely worth something. It's just not worth what it's selling for. And a lot of what the hoopla was retail coming in and buying it because they thought it was very, very cool. And they got ahead of themselves. There wasn't enough stock. And now it's going to roll over. And when there's a lot more stock, it's going to be hard to think it's about $6.6 billion valuation. Maybe it should be 2-3. That's a nice accomplishment if it's a $3 billion company. So just be careful. A lot of us share the enthusiasm for the category, but that lot of us includes Hormel, it includes Nestle's, Impossible Burger, and the Tyson. I've had the Tyson, quite good. I've not had the Hormel, but I had the Hormel people on. They are fabulous at what they do. So I just think that it was great while it lasted. And don't overstay your welcome. There's a reason why they priced it where it was. It's just because it's not worth as much as people got too excited. It's not one of those things where it is as bad as GoPro. It's just that it's overvalued.
Now, of course, you can read Jim's Real Money column over on realmoney.com. You can also read on about our Real Money stock of the day, McDonald's. But before you do that, I want to talk to you about that.
So McDonald's, it's really interesting.
It was kind of disappointing.
But JP Morgan said it would disappoint. I've been waiting to get it. Now, my favorite is Wendy's, and you know that. I had Wendy's on Friday, and I said it's my favorite. McDonald's is not my favorite. McDonald's coming down hard like this. McDonald's probably maybe gets downgraded tomorrow by someone. I don't think so. The reason why I think that McDonald's, as I said when it was down 7, that it was intriguing, was it's very difficult to have, and this is a really interesting concept, bear with me. A downside surprise is hard to come by when a top-level analyst tells you there's going to be a downside surprise. So they basically delivered the not great number. Now, it was not great. Look, I'm not going to say it was a great number, but they did. The global was great. So I think the people come back to United Health. Come back to Home Depot. It reminds me of United Health. Reminds me of Home Depot. So McDonald's, they come back to Home Depot. We bought at 180. Look, we're not going to go pull the trigger on McDonald's right now. I know we're for action alerts, but Home Depot we bought at 180, and it was a terrific buy. I think that McDonald's is going to look back and think that it's very similar. United Health we bought at 215. It's up 200, almost 250. Again, similar. This is something that happens. The great high growth stocks don't come down very much. Nike, the senior growth stocks, and when they come down, you kind of have to hold your nose and buy them. And that's what I think you may have to do with McDonald's. Hold your nose and buy it.
So you don't think, from everything that you just said, my takeaway is that you don't think that the consumers lost their appetite for McDonald's?
No, not at all. There's more competition, but the McDonald's numbers, the global numbers are extraordinary. And the domestic's not that bad. It's just the estimates got ahead of themselves. If you read Easterbrook's release, and I have to look, I'm up there when Easterbrook's doing his conference call, but there's a lot to like. Now you can say, Jim, you like UPS too. I like stocks, senior growth stocks that are down, because I don't get them very often when they're down. United Technologies up 3 at one point today. Now it's barely up. I like that. So I'm looking for situations. I can't say go by Procter. Now, Procter, all the numbers will come up. So you could say 123. It probably goes to 126 tomorrow. And that's terrific. It deserves to be up. It was an amazing quarter. But I am more reluctant I can't just say, hey, listen, go by Procter. I love Procter. I've been loving Procter. I said that when I interviewed David Taylor for Delivering Alpha, I said this is a winner. But I can't. I like to recommend the ones that are down, not the ones that are flying, because it does show a lack of imagination to just say, oh, I like Procter & Gamble. It's like, oh, I like McCaffrey. Oh, I like Dalvin Cook. I mean, yeah, no kidding. So does everybody else.
And I know that before we head on over to Bull Market Fantasy, you and I are both going to be trying to catch up as much as we can on that McDonald's conference call, because we're looking to see what they have to say about the Beyond Meat partnership, what they have to say about millennials and Gen Zers, bringing them back in.
Right.
These are all topics that are very important to listen for, correct?
Yeah, look, and Wendy's hiring 20,000 people to expand breakfast. So you have to believe that the customers come from somewhere. And that is a significant thing. So you run the table on breakfast, and suddenly you have a formidable competitor that is across the street from a lot of your stores. But that is going to hurt you. So that's one of the reasons why the stock makes sense to be down. But the headline at CNBC is not loving it. How about I kind of like it?
I kind of like it. All right, McDonald's, maybe you have a new slogan, maybe not.
Like it.
All right, Jim, we have an excellent show over on...
You're doing an interview with this company.
Yeah, I just interviewed the CFO of Nordstrom, Ann Brahman. We talked about their new flagship store, which is opening up on Thursday. I asked her about whether or not investors should be interested in Nordstrom right now, because it's down 40% over the past year.
Well, Nordstrom and Kohl's are trading very similarly. I happen to think there's something going on at Kohl's that's positive, and the stock acts pretty well. It's separating itself from Nordstrom. Do I think Nordstrom's cheap? Look, there's this dichotomy: Nordstrom, Macy's, Kohl's versus Costco, Home Depot, Target, Walmart, Amazon. I think that there's a price for everything. Now, a lot of the growth guys are saying, you're whistling past the graveyard here with Nordstrom, so it's just a trade. I honestly think that Kohl's, if it go back to 49, maybe we buy a fraction alerts, because it acts too well, and Kohl's has that tie-in with Amazon. Nordstrom your worry with Nordstrom, is it gimbals? Is it Lit Brothers? Is it my folks worked? Is it, geez, I don't know, one of these? It is not one of those classic stores that were, a strip mall store that failed, that we, of the heyday ones, where, Bradley's. It's not that. But I do think that the problem with Nordstrom is it's in the mall. And if it's in the mall, the younger people don't like it. I mean, that's what, look, Macy's, I don't know. I mean, Macy's, the stock acts like the dividend's going to be cut. I don't know. Kohl's is too cheap.
But unlike Macy's and Kohl's, Nordstrom does have one thing, which is the treasure hunting vibe over on the Nordstrom Rack side.
No, I love Rack very much. I think Rack is terrific. But I do think that Nordstrom is a trade. We owned Nordstrom Fractionalers for a while. You can't own you can't own both Nordstrom and Kohl's. It's too exhausting.
All right, Jim, thanks for joining. Guys, we've got an awesome show over on Bull Market Fantasy around 10:45 a.m. But before you head on over to bullmarketfantasy.com, you got to catch up on our earnings over with us on actionalertsplus.com on our daily rundown show, which is where we're heading right now. I'm Catherine Russ, and we'll see you tomorrow.